I think most young people don't realize their most valuable resource is the time, the decades, and letting that kind of work, do the hard work for them, just doing a little something.
One of the most powerful mental models for wealth creation is understanding that time, not timing, is your greatest asset. In this conversation from the Money Guys, they lay out a framework that explains why even the world's worst investor can still become incredibly wealthy, and it's a principle we need to break down. Let's start with this core idea, which is hands down the most important concept for anyone serious about building a multi-million-dollar portfolio.
What if you were the world's worst investor and all you did is you built up cash and then at the very peak, right before every bear market, you invested? So I invested at the top of 2007 and then right before fourth quarter of 2018. Even that investor over a 30, 40-year period still ended up with a huge portfolio. Because if you can give it enough time, you don't have to be right, you just have to be in.
This is the entire game right here. The obsession with market timing, with waiting for the perfect moment to invest, is the single biggest wealth killer for the average person. The strategy being laid out is simple. Automate your investing and stay in the game. The system is designed to reward participation over prediction. When you dollar-cost average into broad market index funds, you're buying consistently, which means you automatically buy more shares when prices are low and fewer when they're high. You're removing emotion and ego from the equation. I see so many people paralyzed by fear, sitting on cash, waiting for a crash that may or may not come, while the market continues to climb. They think they're being smart, but they're missing out on the relentless power of compounding. The takeaway here is that your energy is better spent increasing your income and savings rate, the variables you can control, rather than trying to guess the market's next move, a variable you cannot. But being in the market is only half the battle. The other half is making sure you don't get taken out of the game by one catastrophic mistake. That brings us to the next critical point: the mistakes that you simply cannot recover from.
A lot of people that we've seen in our experience have ended up making mistakes, but they make them later on in their life, and they make them to where they're unrecoverable, right? Like, it's one thing if you blow a couple grand on options. It's another thing in the community that we moved from, where we started the business originally. There was a family that had been incredibly successful. They were real estate developers. They owned all of their real estate, all of their property, a lot of commercial property outright. The father was like completely independently wealthy. Well, his son was trying to make a name for himself and kind of continue the empire. And so he said, "Hey, Dad, I got this great idea. We're going to go develop this neighborhood. But I don't have the capital to do that. So we need to mortgage and put up as collateral all of our commercial buildings." And we're talking about like 8 figures worth of commercial buildings so that we can go do this development. But it's a sure thing. Community's expanding. It's advancing. And then what happened? 2007, 2008, 2009, the entire thing went belly up. So they ended up going bankrupt, losing 8 figures worth of real estate, all of it getting foreclosed on. And there was no reason for that.
The core principle here is about understanding when you've already won the game. The father in this story had achieved financial independence. He had won. But he took a risk he didn't need to take and ended up back at zero. This is a powerful lesson in asymmetric risk. Early in your journey, taking calculated risks is essential. But once you've built significant wealth, the focus must shift from pure accumulation to capital preservation. You stop trying to run up the scoreboard. Personal guarantees, over-leveraging, and excessive concentration are the weapons that can destroy a financial empire overnight. The problem is that the skills and aggression that get you to your first million can be the very things that cause you to lose it all if you don't adapt your strategy. It's not about becoming fearful. It's about becoming strategic and recognizing that your top priority is now staying in the game forever. This leads directly to how your financial strategy has to evolve as your net worth grows.
So you mentioned that a lot of people, when they start making a lot of money, get the shiny object syndrome and they want to go invest in oil and gas or movies or this sort of thing. They want to do the rich person thing because they just became a rich person.
Sure. Right.
How would you recommend someone adjust their approach to finances when you take someone who's a low earner and they're just starting their journey, and then you take someone who's comfortable and they're like halfway through their journey, and then you actually take someone who's wealthy by most definitions, and they're at that point now where they can afford, whatever they want.
Well, I think one of the things that happens is I think the mindset is people do this like apple cart turnover. Hey, I used to invest in my 401k and my Roth IRA and I built up to $1 million, but oh man, now that I'm here at $1 million, I've got to do something completely different. I got to change my strategy. I got to pursue something else. And we always say, don't forget to dance with the one that brung you. The thing that got you from 0 to 100,000 and from 100,000 to $1 million and from $1 million to 10 million can be the same that continues on. You may just start adding stuff to it.
This is a brilliant point. Wealth creation isn't about abandoning the fundamentals once you hit a certain number. It's about layering on sophistication. The core strategy, living on less than you make and investing the difference in appreciating assets, never changes. What changes is the complexity you need to manage. For someone starting out, the focus is pure offense, maximizing income and savings right into simple, low-cost index funds. As you cross into 7 figures, you're not throwing that playbook out. You're adding defense. This is where you start optimizing for taxes, structuring your estate plan, and strategically diversifying into other asset classes like real estate. Not because it's a rich person thing to do, but because it serves a specific purpose in your broader plan, like generating cash flow or hedging against inflation. The mistake is thinking that complexity itself is the goal. The goal is to use complexity only when necessary to protect and grow what you've already built. And as we look to the future, the most valuable assets to build aren't just financial, they're your skills. And the landscape of what's valuable is changing fast.
We have this whole AI thing coming, and this, Bo,
It's here.
I don't know
It's
if he's
not coming.
going to.
It's here.
Well, yeah, it's here. I don't know if Bo is going to agree or disagree. I think that what it's going to push is it's going to commoditize some forms of intelligence. But it's going to make value in community that much more. And I think it's also going to put a lot of value on emotional intelligence. You were talking about earlier sales. I completely agree with that. I think if you are a person that likes people and you like being around people and you're good at networking, that is going to be amplified in this new AI world, because yes, it will be able to write letters. Yes, it will be able to answer your question on the fly, but nothing is going to be able to create human connection and community like those skill sets.
This is a critical insight for anyone thinking about their long-term earning potential. For decades, the path to high income was through specialized technical knowledge. Think coding, complex finance, or law. But AI is rapidly commoditizing pure information and technical execution. The new premium, the new source of immense wealth, will be in the skills that AI cannot replicate: leadership, sales, negotiation, and building genuine human connection. What this means for us is that we need to be investing in our emotional intelligence with the same intensity we once invested in our technical skills. The ability to lead a team, to sell a vision, to build a community, and to solve complex human problems will become the ultimate economic moat. The highest earners of the next decade won't be the ones who can simply code an app. It'll be the ones who can persuade 1,000 people to use it. This is a fundamental shift in where value is created. But to even begin positioning yourself for these opportunities, you have to operate from a specific foundational mindset.
So much on social media, news media is telling everybody the system is stacked against you. And I get it. We have a lot of headwinds right now with inflation and housing and so forth. But there have been times in my life where I've also felt like the system was stacked against you. But if you consistency and then making small steps today, little small behaviors can actually have huge ripple effects in your long-term future. I think most young people don't realize their most valuable resource is the time, the decades, and letting that kind of work, do the hard work for them, just doing little something. It's kind of, we were talking earlier, a Roth IRA is a superpower if you're in your early 20s.
Yep.
I mean, very little turns into a lot without much effort or hassle.
This is the operating system for success. Believing the system is rigged against you is a mental trap that guarantees failure because it removes your sense of agency. Wealthy and successful people operate from a position of ownership. They see headwinds and challenges not as barriers, but as problems to be solved. I think the real wealth killer isn't inflation or housing costs, it's a victim mindset. It's outsourcing the blame for your circumstances. The moment you decide that your future is your responsibility, you unlock the ability to take the small, consistent actions that build momentum. Funding that Roth IRA, learning that new skill, making that sales call, these are the small steps that, compounded over decades, create the massive outcomes people mistake for luck. Opportunity exists everywhere, but you can only see it if you're looking for it. Of course, even with the right mindset, it's easy to fall into common traps, especially when you're starting to make your first real money.
I got my very first big boy job. I came out of college, did not have a lot of money, got my first job, had my first salary. I decided, well, obviously, now that I've made it, now that I'm successful, I need to go buy the fancy. I had a paid-for truck that ran just fine, but I decided, what I need to do? I need to go out and buy a car. And I went out, and I still remember, I bought an Acura TL. It was a super sweet ride, but I financed it for like 5 years. The interest rate was 9.25%, and I had to have my parents co-sign on it. And looking back, I was like, what was I thinking? That car payment that I was spending every month could have done so much better. But I fell in the same trap that most people fall into. Like, I wanted more than what my financial situation was ready for. And it was a dumb bozo decision at that time.
This is the classic mistake of prioritizing the appearance of wealth over the actual building of wealth. That monthly car payment wasn't just a payment, it was a stream of capital that could have been used to acquire assets. Instead, it was used to acquire a depreciating liability for the sake of status. This is the temptation that derails so many people early on. Your first priority with a new, higher income should be to dramatically increase your savings and invested rate, not your lifestyle. Every dollar you use to buy a liability is a dollar that can no longer work for you. By keeping your major expenses low, housing, transportation, you create a massive surplus that can be deployed into your investment portfolio, accelerating your path to financial freedom. You have to build the engine of wealth before you start enjoying all the chrome. The discipline you build during this phase sets the foundation for everything that follows. Ultimately, your journey to wealth comes down to the systems you build and the mindset you adopt. What is the one belief you hold about money that might be silently sabotaging your progress? Let me know in the comments, and if you found this analysis valuable, make sure to like and subscribe for more strategies to build your financial freedom.